Hi, this is the SPX market outlook. Today is Saturday, the 2nd of November. This was a pretty eventful week with FOMC cutting rates again, and the market left that trading range that we were in from the 28th to Thursday. Friday was an up day, but at the same time it was a public holiday in Europe. I am not sure whether we must take this bull run too seriously, but let's face it, this strong resistance area from 30.47, 30.52 is broken, and even if I look at a shorter time frame, the resistance line has now moved up to the 30.85, 30.90 area. We generally don't really look at short time frames below 1 hour, but it shows sometimes that things are moving quicker. And if we look at this fib pattern here, which had a target around 30.52, the next one is incidentally in the 30.90 area. So it is quite possible that it will reach that at some point. We will see. I mean, generally, the market, when it breaks such a strong resistance, and even more so for all-time highs, it needs to actually pull back a bit, test it for support before it can aim higher. The next strong resistance area, when this reddish line moves up on this time frame, would be around 31.25. So we must keep in mind 30.90 and 30.25 as the next strong resistance areas. It is still looking at staying in this channel, so of course we will also check not only this horizontal line, but also how it would behave on the lower boundary. Now let's have a look at a longer time frame. Here it is clearly more bullish, and we actually see this strong resistance here. So we will see how it goes, but we have roughly a channel here, and there's no indication of buying slowing down. So we may actually head for a end of the year rally. What we can also look at, if there's any consolidation, and particularly if 30.50 or 30.20 area the two support levels are broken, it is likely then to consolidate around those levels. So going back to these type of lows, 28.65 or even lower, the lows we experienced a month or 2 months ago, around 28.25, are a bit far now. So I would assume that we could actually place our shorts around these levels and trade the Rhino or other broken butterfly strategies accordingly. In other words, 28.65 is now probably the very strong support going forward. Now finally a look at the daily chart. Note that the call for a pullback is actually indicated by a sell signal here. So we can't discard that there may be some volatility here. We will see early in the week whether the Friday up move was what some people sometimes call a one-day wonder. And on the daily chart, there are again some scaling problems when I change time frames on those lines, but we also have here an indication that the bull run may actually lose steam. So will it lose steam because we would discard the last run or slightly higher? Again, I would say that we could take into account those strong resistance and look at a maybe wider range trading from maybe 29.60, 29.70 and 31.20 area. Okay, that's it for this short report. This is a bit frustrating because, of course, conversely, volatility has dropped for premium sellers. It's actually not exactly a very enticing market to be in, but at least our December trades are very safely positioned, and there shouldn't be much to do on the new January entry, but we will look into that in the next video.